Okay, so when we come to the second year, so in the second year, usually you will end up with 4 double entries. So what happened is, the previous year, the first year, if you remember, when there is extra, so all the extra wouldn't continue to be extra. So it will be used up in the second year. Okay, if it's too little, that means our second year will need to top up the extra. So our first step is always to remove all the receivable or receive in advance. Whatever excess or deficit we will settle first, and then later whatever that you receive this year will be used to account for this year's amount. So that's why these two are the standard double entry that will always happen, and this question will be depending on whether it's the first year or the second year. Alright, so in the second year, then there's a chance that you need to remove a first year that is created, and of course the last one will depend on the question as well, whether at the end of the year, do you still have any receivable or receive in advance after taking into account of the previous years? So let's take a look at an example. So here we go. So at the start of the year, there's actually a receivable. Then at the end of the year end, we actually have a check of $50,000. So you receive a check. So this is our cash at bank. And here they say that there's an annual rent income. So annual means 1 year. So that means 1 year you actually charge 48,000. So that's why this is the amount that you by right you should earn. So that is another way of writing it, that you earn $48,000 this year, because that is how much you are charging. So this is actually your income summary account. So with that we can do our double entry. So first one, start of the year, we need to remove it. So this is an asset and we remove it, we will have to credit it. So we credit rent receivable. The opposite account is always the income account, which is rent. So it will be 1,300. Okay. Then the date, of course, first day. That is the day that you always do your removing. Then we move on to the next part. Okay. So the next part is we have our receive. We will receive some money. Since they say for the entire year, that means we will so let's do part by part first. So receive money, so you will debit cash at bank, credit rent. Okay, and the amount will be 50,000. The amount will be 50,000 as you can see here. Okay, and the date, since it's for the year ended, so year ended means it is December 31st. Next one, annual rent for the 8,000. It identifies itself as an income summary. So income summary is an equity item. Equity item actually go up when you have income. So that's why we will credit income summary. Debit the opposite account, that will be rent. So the other account is always your income account. And the amount will be 48,000. And then the date will be December 31st. So the last thing is, you see how much that you actually receive this year. You receive 50,000 this year, but there's actually all this 1,300, 48,000. So the understanding, now the understanding can be a bit challenging. So the understanding is, I received 50,000 this year. Of the 50,000 this year, last year I got 1,300 that was receivable, means have not been received. So it will split to 1,300 to settle last year's amount, so 50,000. Then this year I actually earned 48,000. So this amount will also be spent for this year, 48,000. So with that, there is an extra, as you can see for yourself. The sum of these two amounts is 49,300. Okay, the sum of the first year and the second year is 49,300, while you receive a total of 50,000. So that's why you end up having a receive in advance. You receive extra, more than how much it should be, because this year should be 48. And then last year there's 1,300 that supposed to be received. So we will use the 50,000 that we received this year to settle last year's 1,300. That's why the difference will be 700. So here you go, 700. Then we have a receive in advance as mentioned, because we receive more than we should. So receive in advance. The other account is always your income account, and this is done at the year end. So that's it.